Today we're just going to speak about what most property investors are missing when it comes to getting started on their property investment journey. Now, there is one part of the equation which is obviously finding a good suburb that's going to grow, that's going to allow you to find a tenant easily and be stable long term. But the other aspect is your long-term goals and your strategy. And because it's such a simple thing to sort of brush over, you're just like, yeah, of course, I just want to make as much money from property as possible. In my opinion, that's not specific enough. Most people, again, they just get started. Let's say they'll find a suburb where the prices are, let's say, $750,000, $800,000, and their borrowing capacity might be, $1 million. And sure, they'll get into this market, they'll buy one investment property, and then essentially they're capped. They can't borrow more, they can't buy more. The holding cost of this particular property causes them to struggle financially with their cash flow. And overall, that investment property, it becomes more of a liability because it's not moving in terms of growth. It's holding you back from a cash flow position. You're unable to save. You can't borrow to buy your next, and it just becomes a very terrible situation. So that's why I think personally it's worth investing a decent amount of money into trying to figure out what you're actually trying to work towards, whether it's a warehouse that cash flows and pays you, whether it's early retirement, you sell everything and you buy something else, a different type of asset, whatever you'd like to do. And then you also figure out how even just buying 1, 2, 3, 4, 5 properties as an investment will impact your lifestyle. I think that's super important, because there's a bit of a process that like property investing is a long-term journey. And if you don't know how that's going to impact your life, and you haven't factored in, costs, for your children's education, and health issues come up, or traveling, if you haven't factored in all of these things, you're going to start to get very stressed. And with property as well, the expected things, the things that I've already discussed, the things that you'd probably already typically expect from holding onto a property, like your mortgage and management fees and insurances and rates and how that sort of impacts your lifestyle. But there are also unexpected things like a roof or a leak, or a hot water system needs to be replaced, or the rental legislation in Victoria, which is something that changes quite regularly, requires you to install an AC in every single room. These are the sort of things that you have to factor in to sort of make it so that you can, with the least amount of stress, build a property portfolio. What we typically use, just to give you clarification, there are different platforms, but we use Zapier, which is a portfolio mapping tool. You can also use Game Plans as well. They essentially do the same thing. Gameplans.com.au, if you want to search it up, does a slightly better job, is a slightly smoother experience, but it is pricier, absolutely. There are other pros and cons as well, but you can go and look those things up. Some people just use Excel spreadsheets. If you can factor in all of the costs that I spoke about, and your borrowing capacity, you speak with your mortgage broker and figure that all out, map it all out. You can do it on an Excel sheet for free. That's always something that you can definitely do. But definitely, before you get started, figure out your long-term goal, figure out how you're going to get there, find something that you can use to map everything out, including all the expenses and the amount of money you need to buy each property, how much growth each property needs to leverage into your next. Really go through it nitty-gritty and map it out. Therefore, you can always look at your plan and make sure you're on track.